To a price action training video. This is going to be a video that's designed to sum up all of the price action formations, all of the candlestick formations that we've talked about up to this point, and kind of put it all together in the market and show you how the market is maneuvering along with the principles of these candlesticks as we've taught them to you. So I've got us pulled up here, US dollar against the South African rand. We're on the 2-hour time frame, and we're just gonna, move through the markets and kind of talk about what we're seeing. So let's just throw a vertical line up over here and go from there. So over here, we're gonna start off over here. So right here, you see how we had a strong bearish candle right here. And strong, when I say strong, I mean it's relative to the candlestick before it right here. So if you compare these, this was a bearish engulfing candlestick, completely engulfed the previous candle. And so if you're looking at this, what do you expect to happen after you see this candlestick print right here? Of course, right? You expect that we're going to head to, let's clean this up here, you expect that we're going to head to the downside. That's what that candlestick means. Now moving forward, what do you think about when you see the next candlestick right here? Does this candlestick tell you that we're going to go down or that we're going to go up? We're going to go down, right? It's a bearish candlestick, a nice solid bearish body to it, nice wick to the upside. That wick to the upside is showing us exhaustion. Okay, exhaustion to the upside, pressure from the upside, we're heading down. There's a little bit of wick underneath, but compared to the top, there's a lot more wick on the top. That means there's a lot more pressure coming from the upside pushing us down. What about the next candlestick right here? What about these candlesticks? Okay, again, notice the wicks on them. So notice this candle right here, strong wick to the upside, nice bearish body. We do have a bullish candlestick right here in the middle, but if you compare the size of this candlestick to the previous bearish candlestick, it's relatively small. So when we see this bullish green candlestick print right here, it's not going to change our overall bias right now. We need something a lot more significant than that to make up for these previous candlesticks that we've been seeing. Now, what about this next candlestick? What does this next candlestick tell you? Yeah, of course. It tells you that, yeah, bears are still in control. This is a bearish railroad formation, and we are going to continue heading down. What about this candlestick right here? Okay, wick to the upside. Okay, nice little bearish close right here. Again, roughly indecision, a little bit of bearish momentum. The next candlestick. Okay, yeah, it's a green candlestick, but look at the wick to the upside. All right, we have exhaustion to the upside. We have momentum to the downside. Next candlestick right here. Again, real simple, right? A bearish candlestick. And look how small this little green bullish candlestick is. Are you convinced yet that we're going bullish? No, absolutely not. Next candlestick, again, not really telling us anything. This is more of like a doji. Not much to it. Just a real small candlestick, kind of like a filler. Now the next candlestick, we do have some bullishness to it, a little bit of green going on, a nice little green body. But again, there's this wick up here on the top that just really throws us off. We're like, yeah, and this is not convincing that we're going bullish. All right, next candlestick, what do you have? You have a small little bearish exhaustion candlestick. So in a full wick to the upside, no wick to the downside, and it closed lower than it opened. This is a strong indication that bears are still in control. Now, look at these next two candlesticks right here. In fact, let me go ahead and draw these right here. Look at these next two candlesticks. How do these candlesticks make you feel? You might be a little worried. You might be a little worried on these. We have a lot of wick to the downside here, and we don't have actual green bodies. We actually have very small bodies. But if you remember correctly, these two candlesticks right here are considered your bullish exhaustion candlesticks. These are an indication that we might be seeing a rise soon in the market. But we're going to need more indication than this. We're going to need to see buyers actually come in. We need a decent green candlestick to follow this before we're convinced, because everything up to this point has shown us that the bears are in control. So what's the next candlestick after these? What's the next candlestick? Well, we get a little bit of indecision. So these right here, these aren't showing us buyers coming in, right? We're seeing no buyers come in fact. So again, we're not convinced that there's any change in trend going on. Next candlestick. This one's pretty easy, right? Giant bearish candlestick right here to the downside. Obviously, a lot of selling momentum going on. So understanding the price action formations is really about being able to kind of open the chart, look at the candlesticks in front of you, and really read the market environment overall and just see, who's in control, buyers or sellers. What do you expect next? What are the candlesticks actually telling you is going to happen, right? So like all throughout this area in here, okay, who's in control based on these candlesticks? Well, we've got a bullish candlestick right here, but okay, let's be honest. Does it really mean anything next to this big bad boy right here? No, not at all, okay? And it's immediately met with strong bearish candlesticks right here. And then notice how there's all these wicks to the upside in here, showing us that there is exhaustion to the upside. And then we get another strong bearish close right here. And if you look real close, this bearish close actually took out, so I'm going to do a horizontal ray right here, actually took out and made a new low right here. This candlestick took it out and closed lower than we've closed previously. So again, just bears are totally in control at this point. Let's get rid of this now. Let's get rid of this. All right. Now this candlestick right here is the only candlestick in this area that actually screams that buyers may begin coming into the market. We may see a market reversal. However, what is that immediately followed with? Bears coming in hard, bears coming in hard, bears coming in hard. Okay, even this candle right here, bearish exhaustion candlestick, bears coming in hard. All right, so if you're able to look at this entire area on the way down, was there any point in this entire area that should have scared you, that should have told you that the trend was going to reverse? No, absolutely not. Based on price action and your understanding of how these candlesticks work, conceptually, you're able to read this downward flow in the market and really feel who's in control. And it's not about what the label of the candlestick formation is. It's not about, oh, this right here is a bearish railroad formation. It's not about that. It's not about, oh, this is the bullish exhaustion. Oh, this is a bearish engulfing. It has nothing to do with that. It's about understanding conceptually what the candlesticks are telling you and how to read them. That's what it's really about. Now, over here in this area, what starts to happen over in this area right here? Well, the first thing is we finally see a convincing bullish candlestick. There's no wick to the upside of it right here, which means there's no pressure pushing it down, and it's a solid, nice green candlestick. Okay, what do we see after that? Pretty much indecision in here, and then we see even a little bit of wick. Look at this, a wick to the downside right here. So we're seeing pressure from underneath right now. So pressure from underneath, all right? And then here we go again with the nice bullish candlestick. Okay, so the environment in this area is fairly bullish. Now, what's going to end this bullish run? What is it that ends this bullish run? Well, ultimately, it's going to be this candlestick right here that ends the bullish run. What does this candlestick right here tell you? So if you're looking in this market right here, and maybe you're in a buy from down here, or maybe you're trying to figure out where the market's going to go next and trying to plan out your trades and such, and you see this candlestick form, what does this candlestick tell you? It tells you that the bears are in control. Look at the size of the body of this bearish candle compared to the previous bullish candle. Completely engulfs it. Okay, strong wick to the upside, showing you that price is being pushed down. There's pressure coming in, and we made a lower close. So this candlestick right here is what ended this small little bullish retracement and sent us back down into bearish territory. And take a look, guys. Take a look at these formations in here. What is this right here? Okay. What is this right here? These are strong bearish body right here. And then right here, you've got bearish exhaustion candlesticks. You've got bearish tweezer formation, more bearish exhaustion candlesticks all throughout here. You've got this one little potentially bullish exhaustion right here. But again, read the environment, guys. Look around this candlestick. Everything else is telling you sell, 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 sell. Very strong signal right here as well. You have the strong bearish tweezer formation, and then you follow that up with yet another bearish exhaustion, and look what follows. Look what follows right here. Very nice move right here. 2,400 points right there. Beautiful trade. Beautiful trade. All right, now let's read this area in here. So let's talk about this. So not always, when you look at a price action formation, is it going to be 100% indicative of what's to come. Okay, there's going to be areas where it does fail you, and that's why it's so important that you use price action not by itself, but in confluence with all of the other technical, fundamental, and sentimental analysis that we teach in this platform. It's so imperative that you understand the concept of confluence and using things together. If you use any one tool by itself, you will struggle. Okay, and we're going to demonstrate that here, even with price action. So check this out. So we're down here, right? We just had the strong bearish move, which we caught, okay? And then we've got fairly strong bearish price action all throughout this area in here. Honestly, even in this area, it's all strong bearish price action. And you guys hopefully can recognize that now. You see all the wicks to the upside. So specifically, we're looking at this candlestick right here, strong bearish price action. This candlestick right here, strong bearish price action. These candlesticks in here, bearish tweezers right here. Look at all these wicks to the upside. Everything's telling you push down, push down, push down. Okay, and the bulls don't look all that strong. It's not really until where do you feel like, based on your understanding of the candlestick formations, price action, and how to read the chart, where do you feel like the buyers, the bulls, finally showed that they had more strength than the sellers based on price action? Right here. This was the area. This was the area that they finally started to show that they were serious. Why is that? Well, up until this point, a lot of our candlesticks still had these wicks to the upside. So these wicks to the upside, and if you look at this candlestick right here, it managed to take out all of these highs. So all of these wicks that were up here, they were being created, they were holding the market. This candlestick right here broke through and closed above all of these areas right here, showing you that the buyers were capable of knocking out all of that selling resistance. It was this bullish, strong bullish body right here that really gave us that indication. So let's clear this off again. All right, so it was right here that we saw a glimpse of that. Now, notice how over here, right after that, you're getting sell signals again. All these giant wicks to the upside, these are bearish exhaustion candlesticks. You get a nice bearish engulfing right here. Not engulfing, but it's a strong candle body. And then what's going to happen right after that? What's price going to do? Is it going to go down? No. It's going to turn around and go up. Okay? So again, kind of understanding that even though these candlesticks right here told you to sell, ultimately you should have not been selling, you should have been buying. Again, if you didn't know in this area and you still thought you were selling, which is very fair if you're just using price action, it's this point right here that you need to realize that these signals right here that you were getting here in the middle, these were false. These were false indications. Okay, it was this point that you needed to realize, hey, these bearish exhaustion candles, these bearish candlesticks, they're telling me the wrong story. Buyers are in control. All right, and then what do we see here in this uptrend? Well, obviously, strong bullish candle right here. And then we're getting these wicks down here on the downside now, showing us that there's pressure on the downside pushing us up. Is there any reason, if you're in a buy trade, so let's say we're in a buy trade from right here. We see this candlestick and we're like, all right, buyers are in control. Let's put our stop loss down here. Let's go. Let's just go for it, okay? Is there any reason to be out of the trade on any of these candlesticks in here? Okay? the first potential candlestick telling you there's a problem. All right. You see this candlestick, there's a lot of wick to the upside. That means there's pressure to the upside. Now the candle did close green, which means it's not as strong of an exhaustion as a red candlestick would be. But what happens next? The next candlestick, we say, okay, so we've got a bearish candle, yeah, but there's some wick to the downside. I'm not convinced. It looks like buyers are still probably in control. Looking at this previous candlestick right here, right? Strong bullish candlestick. What about right here? Again, a really small candlestick. I'm not really convinced. Not convinced. Next candlestick. Small indecision candlestick. Still not convinced. Next candlestick. Still not convinced. There's not really any indication of sellers being in control. There's no reason to assume that the trend would be changing yet. I need to see a strong bearish candle. I need to see something. What happens next? Strong bullish candle. That's almost a bullish Marubozu right there that prints. Okay, we're still in the trade. Is there any reason to exit the trade off in here based on price action? I don't see any reason. My goodness, look at this candlestick right here. Look at that giant wick to the bottom. Giant wick to the bottom. What are those telling you? It's telling you that buyers are in control. Buyers are in control. So, for example, when you see this candlestick right here, with a little bit of wick to the upside, are you scared? Is price action telling you to exit? Is price action telling you that we're going to reverse and go down? No. Compare this signal right here to all of the previous signals just before it. This is a small, insignificant signal. It has no real meaning to it. Okay? It's just random fluctuation. Read your environment. When it comes to price action, it's about reading your environment. Even over here, in this instance, okay? Yeah, there were some candles with some wick to the upside. They have some bearish confluence to them. But, again, read the environment. Look at all of these. Look at all of this. Even just before them, look at this bullish tweezers right here. Printed just before that. Okay? So, yeah, there's a couple bearish candlesticks in here, but nothing telling you with high confidence that you're looking at a market reversal that price should go bearish from this point. It still really seems like our buyers are in control. If you compare the signals, there's a lot more bullish signals in here than bearish signals. You are reading the candlesticks. You are reading the price action. Look what happens next. Okay, so in this area right in here, when we're seeing some of these bearish signs print, we're thinking, okay, prove to us that the bears are here. Prove to us that we're going to go bearish. Show me price action. Show me something significant that makes these other signals look less significant. And it doesn't. What does it do? It prints some small candles here, and then we get a bullish Marubozu. It's not a strong, giant Marubozu, but it's a Marubozu nonetheless. And then what happens right after that? Right here. We get a bullish exhaustion candle. Giant wick to the downside, small body at the top, little wick on the top. It's perfect. It's what we want to see. And then what happens right after that? After you get this signal right here, what happens? Bullish momentum. Again, continue going. You guys see how this works? You're just reading price action the entire time. Look. What does this candlestick tell you to do? Buy. Okay? What does this candlestick right here tell you to do? Buy. All right? What does this candlestick right here with a giant wick on top tell you to do? Sell. And you sold and it worked out great. Okay? What does this candlestick right here tell you to do? Buy. If you look at every area that a trend changes, you're going to find indications. So if we come over here as an example, all right, right in here, perfect, live market. Okay, so up here, can we agree we had a trend change up here? Can we agree we had a trend change down here? A trend change, a trend change, a trend change, okay? So if we look at our trend changes, each time the market reversed, let's see what price action told us. So going into this area, we were bullish, right? Of course, heavily bullish. Now when we get up here, what am I noticing? So let's move this box out of the way. What am I noticing right off the bat? Well, I'm noticing that we've got bearish tweezer formation. So bearish tweezer formation right off the bat. All right. Next, what do I see? It looks like this bearish candlestick right here, strong bearish candlestick, is a engulfing. I would call it a weak engulfing. Weak engulfing because, you know, there's different levels of engulfing. You know, like this one had a wick to the upside. It didn't engulf the entire candlestick if you include the wick, right? This could have been a Marubozu engulfing instead of having a little bit of wick to the bottom, but it's an engulfing nonetheless. Definitely an engulfing candlestick. Now right here, this is a much stronger engulfing. Strong engulfing that took place right here. So if you're looking at this candlestick, let me move this right here, and you compare these two candlesticks right here, what happened? Bears really took over, crushed the recent price action. This candlestick made it closed at a new low. So if you compare these wicks here, we had a new lower close right here, completely took them out, engulfed the previous candlestick. You've got 3 strong price action indications, candlestick formations here telling you market reversal heading down. Now let's go down here. Pretty simple. It was this candlestick right here, this bullish exhaustion candle, that ultimately reversed the market, okay? And there were bearish candlesticks here, and you may not have actually acted on the bullish price action right here until you saw some more confluence. So maybe it was here that you finally said, okay. Or maybe it was here where you finally said, okay, I believe it. The bulls are here, right? But understand the concept. Understand the concept is to read the price action and what it's telling you. This right here was not only was it a bullish exhaustion, it was one of the stronger bullish exhaustions because price closed higher than it opened, creating a bullish candlestick, a green candlestick. So that was a strong bullish exhaustion indicator right there. So let's go ahead and label this bullish, strong bullish exhaustion. All right. What about over here? So let's get rid of these boxes down here so we know the zones that we're looking at. What about up here? Price reversed up here. All right, what were the indications that price was going to reverse up here? Well, there's this candlestick right here, which is not very convincing. If you compare the previous candlesticks in this little area, it definitely had more weight to it than they did. Now, looking at this overall trend, you're not going to be convinced by this strong bearish body right here. It's not until right here where you see this strong bearish engulfing candlestick right here that you really believe that the bears are here. So again though, strong bearish price action, okay, right here. That was your key. That was your signal that this bullish move was done, okay, at least for that time. And then down here, right, so price came all the way down here, and then what reversed us? Down here. Giant bullish exhaustion candle. I mean, oh my goodness. Look at this giant wick down here. There's my arrow. Giant wick down here. Strong bullish body right here. Strong bullish close. Close way higher than the open. I mean, come on, guys. Come on. Up here. Up here. Okay, here's a great example. Honestly, up here, I would have been surprised. There wasn't really any great price action indication that we were going to reverse up here. I wouldn't have believed that we were bearish until I saw this candlestick right here. Okay, because all of these in here, like, yeah, there's some bearish candles, but honestly, I'm looking at this and I'm thinking, you know what? I'm looking at these bullish price action candles and I'm thinking, we look pretty bullish to me. These candlesticks don't scare me. It's not until this candlestick right here where I see, okay, clearly sellers are here. We've got almost a Marubozu, so strong bearish price action. Okay, and even if we don't catch it at the very top, right where the trend changes, we still catch it in time for what? To catch this big drop that's coming, right? Another 2,000 points right there. Nice catch. Now we get down here after this strong bearish price action. All right, what does price action tell us down here? Well, there are bullish and bearish indicators in here. So honestly, in this area, you probably aren't 100% sure what to expect. Because if you look right here, we've got bearish price action, bearish price action. Right here, we've got bullish price action, bullish price action, bullish price action, okay? But we've got bearish price action right here, these bearish tweezers. Okay, but then we've got bullish price action, And then ultimately what happens? We bust up out of this zone. Obviously, when you see this giant bullish candlestick, you should be telling yourself, okay, buyers are in control. This is a strong bullish engulfing candlestick. It engulfed the previous 15 candles, clearly buyer's territory. And then of course price would retrace and then continue up, making new highs. And that's how you go through the chart and you read the candlesticks and you use the price action formations that you've been learning to understand what's going on and why. It helps you understand why things are moving the way that they're moving. Why did price shoot up in this area? It's because you had a bullish exhaustion candlestick right here. It warned you. It told you what was coming. You had to know. All right, and they don't work 100% of the time. For example, right here, he had a bearish exhaustion and we didn't go down, but look what followed it. A bullish exhaustion warning you, hey, no sir, we're heading up, and that's what we did. You know, what happened after you saw this bullish exhaustion candlestick? We continued up. It's what you would expect, right? So again, it's kind of a matter of being able to put all of these candlestick formations together, understand the conceptual idea of what's going on here, and being able to read the market fluently as you go, and using it in confluence with all the other things that we're going to teach you.